So Sri Lanka finds itself at quite a fascinating turning point, doesn't it?
It really does. We're seeing some genuinely encouraging signs of economic recovery after, well, a really tough period.
Yeah, things like industry and services pushing GDP growth beyond what people expected.
Exactly. But it's important to unpack what that actually means for ordinary people,
Right. Because the headline numbers might look better, but we know a significant chunk of the population is still struggling,
especially young people. High poverty rates are still a reality, and household incomes, well, they haven't quite bounced back yet.
which brings us neatly to the core question for this deep dive today.
Mm.
In this specific context, what potential does the stock market actually hold, particularly for, say, younger Sri Lankans?
That's the million-dollar question, isn't it? We've been digging into some reports looking at the Colombo Stock Exchange data.
Trying to get a clearer picture.
And what's really interesting is the current economic climate. You've got relatively low interest rates, right? The benchmark's around 8%. And while inflation dipped recently, there's always that background worry it could pick up again.
So, traditional savings, maybe not keeping pace.
Potentially, yeah. Your money might not be working hard enough just sitting in a standard savings account.
Uh huh.
And that's where the stock market enters the conversation as a, possibly more dynamic way to build wealth.
Especially for younger folks with more time to ride out market ups and downs.
Precisely. A longer investment horizon helps.
So, it's about thinking beyond just saving, getting involved in companies through shares.
Yeah, maybe looking at companies that pay out dividends or ones showing real growth potential.
It could offer a chance to not just keep up with rising prices,
Yeah.
but actually, benefit from the wider economic recovery.
Absolutely. But it's not just about individual gains, important as they are.
No, you're right. What are their broader plus points for Sri Lanka as a whole if the stock market becomes more active?
Well, think about it. More people participating generally means increased market liquidity.
Meaning it's easier to buy and sell shares without prices jumping around wildly.
Exactly. That's a healthy sign. It makes the market more attractive and efficient.
Okay. And it helps businesses too, presumably.
Definitely. It provides a vital channel for companies to raise capital, to expand, to innovate, to grow.
Right.
And then there's the government angle. A busier market generates more revenue
How so?
through taxes. Taxes on capital gains when people sell shares for a profit, taxes on the dividends paid out.
Ah, and broker fees too.
And the taxes on broker transactions, yes, it all adds up.
So it could create this kind of positive feedback loop.
Potentially, yes. A stronger market boosts government revenue, which
Yeah.
could mean more fiscal stability, maybe more funding for public services down the line.
Okay, so the potential is clear for individuals, for businesses, for the government. A powerful engine, really.
If it's working well, yes.
But here's the kicker, isn't it? Our sources suggest there are some pretty big roadblocks stopping people, especially young people and newcomers, from actually getting involved.
Yeah, this is where it gets quite concerning. A major barrier that keeps coming up is the high minimum deposit required by many big brokerages.
Just to open an account before you even buy a single share.
Exactly. Think about someone just starting out, maybe fresh out of university, limited savings.
That initial lump sum could be completely out of reach.
It effectively slams the door shut for many. It's a real exclusion problem.
It really sounds like it. You need money to make money, but you need quite a bit just to get in the door.
Mhm.
And the information we looked at really highlights how different this is from other places.
It does. It's quite a stark contrast. You look internationally, platforms like Easy Equities or XTB,
What do they do differently?
they often have zero or very, very low minimum deposit requirements.
Oh, yeah.
And the impact is clear. It massively broadens access. It helps build a more inclusive investment culture.
It sends a message that investing isn't just for the already wealthy.
Precisely. It democratizes it to an extent.
Which makes you think about the knock-on effects of these restrictive policies here in Sri Lanka. It can't just be individuals missing out, right?
No, absolutely not. The implications are much wider. These kinds of barriers tend to lead to a stock market that's, well, shallower, less dynamic.
Fewer participants, less trading activity.
Exactly. And remember what we said about government revenue.
Lower activity means less potential tax income.
Right. So ultimately, these barriers don't just stifle individual ambition. They can actually act as a drag on the country's overall economic growth. Capital doesn't flow as freely or efficiently.
So tackling these barriers isn't just about being fair. There's a real economic reason to do it.
Absolutely. There's a strong economic imperative. The research we looked at consistently shows this link.
Between well-functioning capital markets and better national outcomes.
Yes. Markets with good liquidity, efficient trading, broad participation. They correlate strongly with higher GDP growth and improved living standards over time.
So by putting up these somewhat arbitrary barriers, the brokers might even be limiting their own potential revenue in the long run, not to mention the nation's.
It's a valid argument, and it deprives the government and the whole economy of the full benefits a truly thriving stock market could offer.
We even saw that quote from the Hani Igotawat's research,
Ah, yes, that was insightful.
highlighting how important the size of the business sector and the stock market are for a country's economic growth.
And she also stressed the need for, a peaceful, stable environment and secure capital markets to actually implement policies that improve people's lives. It all ties together.
Which naturally brings us to the role of the institutions involved.
Right.
What about the Colombo Stock Exchange itself
Hmm.
and the regulators?
Crucial players, obviously. The sources suggest the CSE should be a key driver of reform here.
But there seems to be some frustration.
Yeah, some commentary implies that without being more assertive, without a real mandate to push for accessibility, the CSE risks being, well, one source called it a tiger without teeth.
Wow, that's quite an image.
It paints a picture, doesn't it? It really highlights why regulatory authorities need to step in more actively.
To set the right kind of policies.
Yes, policies that are genuinely investor friendly. A really obvious first step would be standardizing account opening requirements across the board.
Making them reasonable and accessible.
Exactly. Getting rid of those prohibitive minimum deposits or at least drastically lowering them.
It really feels like it boils down to making sure the broker's practices align with the country's broader interests.
Precisely. The goal shouldn't be exclusivity. It should be fostering broad participation for the national benefit.
Because, as we said at the start, Sri Lanka's recovery is still delicate.
It is. Sustained prosperity isn't guaranteed. It needs bold policies and, crucially, inclusive policies.
So lowering these barriers to the stock market isn't just a nice to have.
No, it's an economic imperative. It's fundamental for building a stronger future.
If you empower young people, first-time investors, let them participate.
You unlock new sources of capital, new drivers for growth. You potentially boost government revenue streams.
And build a more resilient, maybe more equitable society in the process.
That's the hope. That's the potential.
So the analysis seems clear. Recognizing the problem is one thing.
Acting on it is another. The information points towards it being time for the authorities to take decisive steps.
To really push for change.
Yes, to work seriously on aligning how broker houses operate with what the people and the nation as a whole actually need.
To transform the stocks market from what might feel like an exclusive club
into a true engine of national development, accessible to more people.
Okay, so wrapping this up then. Considering everything we've discussed, the potential, the very real barriers, especially for young Sri Lankans, what do you think could be the single most impactful first step the authorities could take right now to really encourage more young people into the stock market? And what kind of wider ripple effects could that one step realistically have?